早晨，各位。
Good morning. We have a quorum, and this is the appointed time. I need to confirm minutes of the meeting held on the 5th of November 2018. The minutes have been circulated to members via CB bracket 1553/1819. The Secretariat has not received any proposed amendments, so if there are no further comments, please confirm the minutes of the meeting. Information papers issued since the last meeting on the 7th of January, and the panel received altogether 3 information papers. Details are set out in the agenda for reference. Item 3. Date of next meeting. The Secretariat has issued a notice to inform members that the next meeting will be held on the 19th of March 2019, 9:30 a.m. The administration has proposed to discuss 2 items at the regular meeting in March. Number 1, budget of the Insurance Authority IA for the financial year 2019-2020, and number 2, consultation on uncertificated securities market regime. So about these 2 items for the March meeting, any comments? If there are no comments, we then move on to the joint panel duty visit. The Secretariat earlier consulted 4 panel members, members of 4 panels in relation to joint panel duty visits to major cities in Yangtze River Delta area. And based on the members' replies, the Secretariat already conducted the follow-up work, and the joint panel meeting will be held on the 22nd of February 2019 to discuss the preliminary proposed itinerary and the budget. Any comments, Mr. Jeffrey Lam? Chairman, I strongly support this proposal. Yesterday, the Greater Bay Area Plan was announced, and in the plan, there are a lot of initiatives relating to banks, commerce, and Yangtze PRD is a very important region. I think that, Chairman, through your good self, if we could propose items for the visit, we may improve the itinerary. So thank you, Mr. Jeffrey Lam. Mrs. Regina Yip. Chairman, item 12 of the list of outstanding items for discussion. In fact, I already proposed a discussion on enhancing the flow of capital in the development of the Bay Area. Since the Greater Bay Area Plan has been announced, I'd like to advance the discussion of this item. We have a joint panel meeting on the Greater Bay Area Plan in March. Without further ado, let's move on to the 4th item. And meanwhile, let's invite the Hong Kong MA representatives to come in. Before the meeting, the Hong Kong Monetary Authority provided a paper to us. It has been tabled.
好，我哋歡迎監管局嘅代表。
May I welcome the Hong Kong MA to our meeting, and may I welcome Mr. Norman Chen, Chief Executive of the Hong Kong MA, and his team to give us a presentation. And please conclude the presentation within 20 minutes. Thank you, Chairman, members. Good morning. I'd like to speak on 5 areas and brief members on the work of the Hong Kong MA. Let me start with the assessment of risk to Hong Kong's financial stability. Now, about review of 2018 for emerging markets, they were under a lot of pressure. It wasn't a good year for them. About the currencies, last year, the US dollar remained strong with interest hikes imposed by the Fed Reserve. Emerging markets, to different degrees, were under a lot of pressures. Discounting China for emerging markets, altogether, the MSCI depreciated by 8.8%. For renminbi in China, the total depreciation was 10.1%. Against US dollar, the appreciation was 5.4%. And in the middle of the year, 2 emerging markets were under substantial pressure. There were extensive media reports, and those 2 emerging markets were Turkey and Argentina. The drop was close to 50%. The situation has stabilized, albeit not very satisfactory. Now, for equity prices, because of instability in emerging markets, the equity prices in emerging markets all fell. And if you take a look at the blue line, Hang Seng Index, in early January last year, there was a peak, and then the index continued to fall by 25%. And for SSEA share, it fell by 30.3% with some rebounds in the middle. For emerging markets excluding China, you would see the high-low difference amounted to 20%. Towards the end of the year, there was a rebound, and overall speaking, the high-low difference was 12.3%. Now, in this chart, you will see the S&P 500 index marked in red. This is a rather special index. Now, for emerging markets, Hang Seng Index and SSE Asia Index, all of them dropped throughout the year. Whereas for U.S. market, you will see it went the other way. In fact, it continued to rise all the way until it reached its peak in September, October, before there was a major sellout of shares. And for U.S. stock market, it's such a big market, and the high-low difference, as you could see, was very substantial, some 20%. And you might have read from media reports that the index dropped by some several hundred points. And with increase in market risks, there was an observation in the U.S. market, and even the President of the United States agreed that for the trade conflict, U.S. ultimately would win, and for the imposition of tariffs, again, U.S. would prevail. And in fact, this theory was tested and adhered to all the way until September, October, as you can see in the upward trend. But the impact on the retail and trade didn't show until October. So U.S. investors by then generally believed that should the trade war go ahead, U.S. would ultimately lose out as well. So about the U.S.-China trade negotiations attitude, in fact, it posed a lot of pressure on the market. About economic outlook this year, according to the IMF forecast, in fact, last April, there was a forecast for this year. It was adjusted downward in October last year and further adjusted downward in January this year. For advanced economies, last year the forecast was 2.2%. However, recently in January, the IMF adjusted the forecast to 2% growth. And for emerging markets, again, it has been adjusted from 5.1% to 4.17% and then to 4.5%, quite a substantial downward adjustment. So in fact, the outlook for this year's economy is rather bleak comparing to last year. And about the Fed Reserve interest rates, it affects the flow of capital around the world. And comparing to September last year, where there was a forecast, you can see that the forecast was adjusted downwards by 30 pips. That's the interest rate forecast.
And for the final line, you could see that it's actually a forecast in September, and now there's actually a downward adjustment of around 60 pips. So you can see that the Fed is continuously adjusting the projections downward. After the meeting in January, you can see that they have said that they're going to maintain their patience. Another strategy is to try to make a balance sheet reduction. The highest point was about 42,000, and then now, if you could take a look at the right side, you can see that the Fed has made an autopilot adjustment. So they have already set a plan, and then it would be automatically adjusted per month until they make other changes. But then recently, the Fed has changed its stance that the speed and also the range of change would depend on the economic situation in the US. So that's quite a big difference from autopilot. It seems that other than the US-China trade war, this autopilot strategy may also have an impact on the economy. So we can see that for the outlook for this year, it would be pretty much similar to that of last year. There would be a slowdown. And the prediction of this year is not to hike interest rate. Some people believe that there may actually be a drop in interest rate, but it would most likely maintain the same. And that would probably ease the strength of the US dollar, which would alleviate some of the pressure faced by emerging market economies. There are, however, some major downside risks to the economy this year. And there's going to be another discussion on the China-US trade conflict. We don't know what the outcome would be, but we hope that an agreement would be made. We do not know what's going to happen. But in the short run, it seems there wouldn't be a solution, a resolution. Another risk is the Brexit. Risk is high, and the Brexit date looms closer. Some people believe that a hard Brexit will not happen, but of course we wouldn't know until later. And around the end of September, there would be another federal budget impasse in the US, and there would also be other political risks in Turkey, in Iran, and also conflicts with the EU. This chart shows the year-on-year change of mainland China's exports. There wasn't too much of an impact on export last year until November, and then in December there was a negative growth of 4.4%. The latest number in January was a rise up to 9.1%. However, if you break down the US-China exports, you would see that exports to the US was a negative 2.2%, and exports from the US to China was a negative 41%. That was a huge decrease. So this shows the impact of the trade war on imports and exports. As I said earlier, the mainland economy would be under pressure. The non-manufacturing sector is still quite strong at around 54.7% for the manufacturing sector. However, there was a drop to lower than 50% in November and December. Maybe that was an issue with the contraction. This shows the financial deleveraging in the mainland. Can still maintain the bank loans at 13.1%, but you can see that shadow credit has been falling. It has fallen to negative 10.4%. So that actually has a huge impact, and you may have heard that on the mainland it was difficult to get loans, especially by SMEs. So you can see that the regime actually is quite tight right now. Merchandise exports has been doing well in Hong Kong until the end of last year, when we witnessed a negative growth of 5.8% in December. So that was actually also a display of the impact of trade conflict. Demand for trade finance has also softened. You can see that starting from September, the trade finance has been dropping, and the latest figure was a negative 7.6%, which is actually a huge drop. Now moving on to the property market in Hong Kong. The blue line shows the RMVD's housing prices, and the red line shows the Center City Leading Index. There was a peak in the RMVD's housing prices in July, and then it started to drop. The Center City Leading Index has also been dropping, but in the last 4 weeks there has been some slight fluctuation, rising to about 0.3%, and then a rise of 0.1%, and then it dropped again 0.5%. For transactions, starting from the end of last year, volume weakened. There were only around 2,000 transactions in the primary market, but then in January there was once a rebound for a primary market transaction. You can see that there has been an increase to around 2,000 transactions, and also a rise in the secondary market transaction. We see interest to be mostly the same in January, and so you can see that it's around US dollar, Hong Kong dollar. You can see that it's trading around 7.84. So you can see that it is almost the same. And if there are any new happenings, we would consider either selling or buying in more US dollar. So that is actually quite a normal phenomena. the global economy, whether it being an emerging economy or a growing economy, is facing uncertainties. The Fed may actually consider not increasing interest rates this year. There will continue to be market volatility. The stock's value are going too high. Would it be a more successful discussion about the U.S.-China trade war? We don't know. But our Hong Kong economy is quite stable, and our financial system continues to be sound and resilient. There have been some changes in the property market, but we cannot be certain of what's going to happen until it really goes into a downward cycle. And so the public should continue to manage risk more prudently. And now I would like to defer to Arthur to talk about the banking supervision. Thank you. In 2018, there was a moderate credit growth of around 8.4%. If you could look at the 16% the year before, so you can see that there actually been relaxed, mainly because in Q3 we saw that there was actually a tightening in credit, and so you can say that it is staying at a healthy level. We're just looking into the external risk. In Q4 of last year, especially in November and December, we see that the situation has basically steadied down. The red line shows the classified loan ratio. In Q3 of 2018, it's 0.54%, which is actually a very low level compared to other cities. So you can see that we're staying at a healthy level. We're still looking at the figures for the beginning of this year, but we can see that there actually has been a slight improvement, even though we do not have the exact figure yet. In the last meeting, members asked about the situation of SMEs lending. So I have prepared PowerPoints to show you the current situation. We conduct 2 surveys, one on banks, which is looking into the bank lending to SMEs. Well, if we look into the volume of clients, and then we look into whether their facility limit has remained unchanged. So the red actually shows the facility limit decreasing, but in the middle you can see that it maintains the same, and the bottom it shows the increase of facility limit. There hasn't been too many changes in the last few quarters. There's only a slight increase in facility limit, especially towards Q4. So in Q3 and Q4, we see that there has been a slight increase in bank lending to SMEs. So this is the situation at the bank level. Since members asked about the lending situation, we met with the banking sector after the last meeting. I would like to thank Mr. Chen Zhenying for helping us arrange the meeting. We hope the banking sector will understand the concerns of the business sector, and the banks have reiterated that they are going to maintain the same lending situation. And here in this graph, you see the SME's credit conditions. it is a bit different because there's a different perception. One is at the bank level, one is at the SMEs level. So this is actually the SMEs perception of the bank's credit approval stance. Whether they find it easier or more difficult to receive lending from banks. There hasn't been many changes made in the last few quarters. Most of the SMEs perceive that that there is a same level of difficulty in receiving bank loans, and actually some banks find it easier, that it has become more relaxed to receive lending. So this actually helps us understand the SME's perception of banks.
Chairman, in the interest of time, we have 2 slides explaining our work on amending subsidiary legislation. But the paper has been circulated to members before, and I think I'll skip this part, but I welcome questions from members. And then I'll give the floor to Howard. Please be succinct. Yes, I will briefly go through the slides. First, about the faster payment system, FPS. Since the end of September until the end of 2018, in terms of the number of registrations, we have over 2 million. In fact, the number just exceeded 2.3 million recently. Well, in fact, it doesn't mean the number of users. Some users may register both the mobile phone numbers as well as the email addresses. But it shows that the FPS is quite popular. And I'd like to go through other electronic payment facilities. I won't go through the growth figures. In the interest of time, I just want to reiterate that apart from the satisfactory growth in the use of services, we also have diversified services. For example, mobile payment is now accepted on public transport, smaller retailers. Well, previously, because of the stringent requirement on using Octopus, this wasn't possible, but now mobile payment is possible. I'd like to go through the open application programming interface for the banking industry. Well, the deadline in January 2019 was just passed, and banks have been following our roadmap in its implementation. We have over 500 open APIs launched by banks. We have also received requests from the IT sector regarding the use of open API and their new services. We also have DLT, distributed ledger technology, something like the blockchain platform. And these initiatives have been announced. I'd like to turn to the next slide. This is rather technical, but it is very important to our financial market, and that is interest rate benchmarks. You may have heard that for LIBOR in London, the UK authority already announced that by the end of 2021, it could be scrapped, and the central banks around the world already reached consensus. They would like us to adopt a different interest rate benchmark for reference around the world, and we are working with the Treasury Markets Association, TMA, as to handling of LIBOR-related contracts in Hong Kong. At the same time, they're preparing the HONIA benchmark as an alternative for the market. This is, however, not an easy change because there are existing contracts related to LIBOR, and the HONIA benchmark is different in nature than the other two interest rate benchmarks. I'll give the floor to my colleagues. I'll just very briefly go through the third point about cross-border renminbi business, about the Greater Bay Area. Yesterday, the Greater Bay Area Development Plan was announced, covering different aspects and will follow up with the mainland authorities. We'd like to, however, focus on a number of financial facilitation measures. We have been following up on these measures with some progress. For example, the use of Hong Kong e-wallets in the mainland, and apart from WeChat payment on the internet, the payment service can also be used at physical brick-and-mortar stores, and we Alipay Hong Kong can now also be used, and we'd like to streamline the procedure of a bank account opening, and we're also working with banks and following up on other streamlining measures. I'll skip green finance and I will come to the slide about investment income. Now, like Mr. Norman Chan said, 2018 was a rather unstable year with plunges in prices in different stock markets. In fact, there were also a fall in a number of indices around the world. So last year, be it funds relating to bonds or equities, they all saw a fall in general. Now, for this table, you would see that we show the full year investment income performance. For bonds, we made a profit of 57.4, and equities 20.7 deficit, and foreign exchange or other equities 39.3. For foreign exchange, it was subject to valuation, subject to restriction, and for other investments, 24.5. Overall speaking, investment income 13.9 billion, and the overall return was 0.3%. As members would know, we have been diversifying our investment in the recent years, including long-term growth portfolio. This is the chart showing the figures as at the end of September 2018. For private equity, the investment value was 190.9 billion, real estate 87.4 billion, totaling 278.3 billion. We also have about $200 billion of outstanding investment commitments. But we should also pay attention to the figure on the right about the outstanding investment commitments. Well, in fact, for these asset classes, the annualized IRR over the past 10 years was 13.8%. But more importantly, they are less related to other assets, as our diversification strategy would have. Now, about this charts in 2018, fee payment to fiscal reserves amounted to $43.8 billion. The calculation was made based to an interest rate payment of 4.6% or rate of fee payment. For the LTGP, over the past 25 years, since 1994, if you take a look at the chart on the right-hand side, the return was 4.7%, higher than the 2.1% inflation rate during the same period. Perhaps I'll pause here. Thank you. Thank you, Mr. Chan and your team, and Deputy Chief Executive, for your presentation and analysis. Please raise your hand if you wish to speak. Let's start with Mr. Ronald Chan, followed by how many minutes? 4 minutes. Thank you, Chairman. Mr. Norman Chan gave a very detailed analysis on the global economy. I really hope that the things are up to the Hong Kong MA's expectation. Yesterday, the Hong Kong Greater Bay Area Plan was announced. My question is whether we would conduct a duty visit to the Greater Bay Area for the banking industry so that the practitioners could discuss facilitation measures with their counterparts. Second, exchange fund is a reserve of Hong Kong MA to support the stability of Hong Kong currency rate. In 2018, the investment income was $13.9 billion. But apart from the long-term growth portfolio and real estate income, we basically relied on the yield of bond investment, 57.4%. However, bond investment amounted to 69.62%, close to 70%. The interest rates have leveled off. I'd like to know how the Hong Kong MA would handle this class of investment with the largest share. And discounting inflation, well, in fact, there's been little growth in assets. I'd like to know whether there is any room for improvement. And also, page 57 of the paper to LegCo refers to a measure to allow elderly to withdraw cash at convenience stores. The measure came into effect in March and April last year. Well, the administration hasn't announced any figures. I wonder if you would collect statistics from service providers so that we can improve the service. Thank you. Mr. Chan. Thank you, Mr. Chan, for your questions about Greater Bay Area Plan. The outline has just been announced. Covers different aspects, including the financial services. And just now, my colleague referred to cross-border use of e-wallets, bank account opening, wealth management, as well as flow of capital between enterprises. We'd like to implement the initiatives in the plan as soon as possible. Apart from the relevant units in the Greater Bay Area, we also need to discuss with the central bank in Beijing, because it is not a regional issue. It also relates to a measure that would affect the flow of capital. So, of course, we need to work it out with the relevant authorities in the Greater Bay Area, but also with the Beijing government. We need to consult the views of the sector, because the framework could only be introduced with the help of banks and financial institutions. For the exchange fund, as we explained a number of times, it is not just an investment fund or reserve fund. Well, that whether or not the rate of return is low depends on risk appetite. Well, last year we received an income of some $50 billion on bonds. If you only focus on investing in the equities, you would suffer a greater loss. Well, for equity funds that we commonly see in the markets, last year there was an apparent fall. Arthur, can you respond to the point about cash withdrawal for elderly? Yes, we've been collecting statistics. In fact, for one convenience store chain, each elderly user could withdraw $500 each time, twice a day, without making a purchase. Since its implementation in March last year, when all convenience stores of that chain was put into service altogether, well, we have some 630,000. Well, the amount may not be substantial, but we should bear in mind that there was a cap of $500 withdrawal each day. And the figure may not be substantial, but some elderly users do withdraw cash from post offices, and we're still discussing with Hong Kong Post. Next, Mr. Chen Kim-po. Thank you, Chairman. Thank the Hong Kong MA for the detailed explanation about the China-US trade conflict and the situation about Hong Kong. Now, let's say the Fed Reserve in U.S. has adjusted its timetable for interest rate hikes, and that it has slowed down. Now, our outlook for the property market is by and large based on the U.S. interest hikes. Now, because of political or other reasons, Fed Reserve may not even increase interest rate this year. So what about prospective property buyers? They have been looking forward to a fall in interest rate and hence property prices. Towards the end of the year, the interest rate increased and there was an increase in mortgage payments. However, the interest rates have now fallen. So what should Hong Kong prospective property buyers expect in the face of the Fed Reserve's changes in investment in interest rate strategy?
Thank you, Mr. Chan, for your questions. The interest rate affects a mortgage, but it's not the only factor. Well, you also have to consider the purchasing power of the public and also the land supply, which would also affect the property market in Hong Kong. But I do believe that there is a property market cycle. I've never seen a cycle that would only go up and not go down. So when it rises to a certain level, then it would drop. We do not have a active interest policy, so we have a reverse cycle to look into the property market. But you have to understand that you cannot only consider one factor. When there is a hike in interest rate, much like when the environment became unpredictable in 2017 and 2018, then the interest rate could be used as a tool to help stabilize the market. This is not easy to handle, but I'm sure that purchasing power of the public will continue to rise with increase in salary, and there could be a better balance between supply and demand, because with higher supply, then it will not be so difficult to purchase property. Hong Kong is lagging behind in interest. There are also other volatility. Well, what would happen if the U.S. Sino trade war will go ahead? And what if North Korea and U.S. go back to how it was like 2 years ago? These are all unpredictable factors we have to consider, as these would all have a huge impact on the world economies. Well, many people would need to pay for the property in 30 years, so you also have to pay attention to those details. Next, Mr. Long Hong. Thank you, Chairman. Well, looking at the investment return in the past few years, you can see that there shouldn't be too many losses from exchange funds. You can see that the compound interest is around 4.7% in the past few years. And if you balance that out with inflation, inflation is only 2.1%. Many people tell me that they are quite confident with the performance of exchange funds, and they are very confident in Mr. Norman Chan's decisions some members of the public asked whether they could also purchase the same products as the HKMA. Or some of the products provide quite high returns. Well, not exactly high, but stable return. So would you also come up with products for members of the public? And that would also provide a higher flexibility. I know that annuity fund is also a new consideration. That can actually be a retirement protection scheme. Are there any products? Well, I know you don't want it to become like a fund, but what if you may have set a time limit, for example, a fixed 3-year or 5-year return? Mr. Chen, thank you, Mr. Look, for your question. Our basic investment requirement is to try to preserve your capital. So even if there is market fluctuation, we try to minimize our losses. Under these circumstances, when the market is doing well, we won't make as much money as equities. We hope that in the long run we'll be able to preserve our capital. That is actually difficult to achieve because we do need very strong cash flow to tackle any market volatility that may occur. Well, we are part of the Hong Kong government, so we also have the responsibility to manage our funds. We have over 4 trillion right now, and it is a very high value portfolio. Other than these capital reserves, there are also other funds at the HKMA. These reserves actually come from the Hong Kong government. So we work with the government to come up with an arrangement that for some of the funds, they could actually leave the funds with us for us to invest. But for members of the public, you have to understand that we are not a private organization. We are different from mortgage. We are, well, if you want a special product, then you will need to work together with the government to have a to work with the Hong Kong Mortgage Corporation to come up with special products. Are there any other questions? I'd like to thank Mr. Chen. Are there any other questions? No, I'd like to thank Mr. Norman Chan and the other Deputy Chief Executives for attending today's meeting.
時間係45㗎嘛，佢哋早15分鐘，佢大約搭半先到嘅。
要唔要講係佢哋嚟講？唔係啊，休息10分鐘啦。
休息一陣，要休息，暫停啦。暫停會議啊！
好啊，我哋暫時休息10分鐘啊，10分。
Let us take a 10-minute break. Please return in 10 minutes. Thank you.